Hello and welcome back to another edition of Kryptonite. I'm Colton and today I'm with Leo. How are you doing today, Leo?
Hello, Colton. Very nice to meet you again, and welcome back to everybody to Kryptonite channel. So today we are going to talk about Stacks. What is Stacks, Colton?
Yes, no problem, Leo. Stacks is a cryptocurrency project. It seeks to unlock the full potential of Bitcoin's blockchain by bringing smart contracts and decentralized applications to Bitcoin. It was originally known as Blockstack, but it rebranded in 2020 to Stacks. It is a project designed as a layer 1 solution. It's basically Bitcoin's base layer. Platform is powered by Stacks STX token, fuels the execution of smart contracts, the processing of transaction, and the registration of new digital assets. Like I said, Stacks is a layer 1 ecosystem anchored to Bitcoin. The smart contract it brings to Bitcoin does not change any of Bitcoin's features, including its security and or stability. So Stacks and the decentralized apps. It's open and modular. So developers can build on top of each other's apps and generate features that wouldn't be possible otherwise. Everything that happens in the Stack ecosystem is backed by the most secure blockchain, which is Bitcoin. Stacks, the interaction of two parties, they're miners and stackers, not stakers. So a little bit later, we'll discuss, how you stake stacks. But, technically they don't say you stake. They're called stackers at the end of the day. The interaction, so regulated by a unique consensus mechanism, proof of transfer, or POX. In the stakes blockchain, miners don't actually mine anything. They exchange BTC at the end of the day. So basically, it's already mined from the Bitcoin blockchain and committed for a chance to earn STX coins. Each block mined on the Stacks blockchain stores users' identity and transaction metadata. Basically they use this to interact with all the apps in the Stacks ecosystem. Any changes made to stack IDs or wallet balances can be verified using the Bitcoin blockchain. This also applies to Stacks smart contracts, written into a special coding language developed and tested for Stacks by Algorand. All of the remaining data not stored on Stacks blockchain it's stored using a bespoke storage system. I'm probably butchering this name, but Gaia, that relies on cloud storage providers like Azure and Dropbox. So this gives users the option to sidestep cloud storage in favor of their own cloud storage solution. STX, the native cryptocurrency token of Stacks ecosystem, used to register digital assets in the Stacks blockchain, including user IDs, smart contracts, and more.
Thank you very much, Colton. And can you tell us something about the history and performance of Stacks?
Yeah, I can. So I'm probably going to butcher these co-founders' names. Mundeeb Ali and Ryan Shea. They're from Princeton. Well, Ryan Shea's from Princeton, and they did this in 2013. Ali, so on Stacks immediately after he graduated. So basically, he started working on this right away. He was a mechanical engineer in computer science and still works with the platform. He's the CEO of Hyro PBC. Shea served as co-CEO from 2013, but he recently left in 2018 to pursue his own stealth startup. He claims will tackle the greatest problem facing humanity in the 21st century. So Stacks is conceived as a response to the fact that the internet has become increasingly centralized in the hands of big players. So just like everything else with the bank and all that, the internet is the same way. It's owned by a couple people and they run, the internet. They're trying to make it decentralized and, everyone has an opinion and everyone has a voice. Ali laid out the vision for the next generation of internet in a 2016 TED Talk, outlined the architects for a new trust-to-trust design for the internet. Unlike most crypto projects, Stack was in development for as long as 8 years before it saw the light of day. So the Stack team, basically they took their concept through a robust peer review process. It even went through academics at Princeton and Stanford, and they picked it apart to pluck out any potential weaknesses. So, yes, this is, it took them a long time, but they went through the academics at Princeton, Stanford, one of the, obviously Princeton's an Ivy League school, Stanford's on the West Coast, but it's basically a West Coast Ivy League school. If you're not from the United States, it's not really an Ivy League school, but people look at it like that. So, it is a huge, huge school, and it is pretty cool to see, that they, looked at it, took it apart, and gave them, feedback on what to do. Stake takes a look at the functions that make Bitcoin work, seeks to extend its functionality beyond what was thought possible without the need to hard fork or change the original blockchain. So they have a novel consensus mechanism, proof of transfer / POX, to connect directly with the Bitcoin blockchain. So they want to build a new smart contract coding language, which is called Clarity. It is designed around an easy-to-use syntax that makes it accessible. Maintaining top-level security, of course, that's their main thing here, is that they want to keep the security high. They don't want to mess with that. So Stacks is a lightweight architecture. So a separate data storage solution, which essentially equals outsourcing the service to commercial cloud storage providers via its own storage system. Gaia, allowing those who are disruptful of cloud storage to store their data themselves. So Stacks is designed with an integrating naming service, Blockstack naming service. It gives the users ability to designate names to assets that are readable by humans. The assets, these are secured with a combination of public and private keys. Stack has received the backing of the U.S. government, which again is huge after everything going on, the clawbacks, everything with, FTX, everything with XRP. It is cool to see the government is finally starting to, somewhat come around. I shouldn't say they fully are coming around, but they're somewhat coming around at the end of the day in the form of millions of dollars of funding for its development. More importantly, the SEC backing for its initial coin offering equals Stacks, the first ever blockchain token to achieve this. And like I said, this is huge at the end of the day, especially with everything going on. Now, doesn't necessarily mean that the U.S. government is going to back off any other companies, but it is nice to see, and more importantly, the SEC, they're kind of somewhat adopting crypto in some sort of fashion. But as you guys will see next week, the clawback and everything, we'll do a video on that, and you'll see that the U.S. government is also trying to mess with us and take our money at the same time. So, but that's for another video, and we'll discuss that a little later next week. Miners commit to BTC to generate new stack tokens. STX coin holders can stack their tokens to earn Bitcoin as a reward. How profitable the mining system will prove for miners in the future? Primary factor, the relative price of STX versus BTC. The price of STX, nothing short of stellar in 2021. Is its value long-term? Well, yes, I think so. The take-up of Stacks platform, the continued growth of Clarity-powered smart contracts, shouldn't this growth stagnate? It's hard to say. The market right now is a little different, but I think as the market starts to correct itself, I don't think the growth will be stagnant, but the price of STX should suffer to the point that no miners are willing to commit their BTC in exchange for stack tokens. Important. Smart contract developers need STX tokens to add their contracts on the blockchain, and users need STX to pay gas fees when executing their contracts. And again, it's just like Ethereum. Do it on the weekend. The gas fees are cheaper. There's less people using it. That's just the smart thing to do at the end of the day. So security. Stack leverages Bitcoin's proof of work consensus. So the combined efforts of thousands of miners and nodes to protect the network against an attack. By making it unfeasible to undermine the network, so they use computing power and financial incentive. To bulwark this further, the aforementioned proof of transfer, miners committing BTC to mint STX, linking the security of Stacks platform to BTC. So all these transactions are verified via, Bitcoin. Latest iteration of Stacks, the blockchain transactions capable of scaling independently of Bitcoin on which it relies. So the Bitcoin blockchain used only to provide a final verification and to ensure the security throughout the entire process. And the end result, thousands of transactions on Stacks blockchains produced by just a single hash on Bitcoin's blockchain. STX. fueling the connection between stacks and Bitcoin. So it's a proof of transfer consensus, like we said earlier, supports the creation of smart contracts and decentralized apps, the creation of inevitable and transferable virtual assets, can be used to publish new contracts to the blockchain. So to pay the transaction fees that are underpin the execution of these contracts, STX tokens used in this way are burned in the process. So here are some other functions: voting on upgrades to Stacks protocols and participating in the selection of app reviews. So again, this is kind of what they wanted to do. They wanted to give the people who own coins and tokens, a voice. That's what we lack right now, in terms of internet and how we work on the internet. Google makes the decision, Google makes a drastic change, and we kind of just have to follow. They're coming out with Google Analytics 4. There's nothing we can do. If you want to track people on your website, you have to make that switch. At the end of the day, this is what STX is trying to fix is, hey, before we make a change, we want to get a vote from the community, and then we will go from there. So STX tokens can be traded on centralized crypto exchanges. The most popular to buy and trade is Binance, and you can also buy it on DigiFinex and Coinbase. The all-time high price was $3.39, and this was December 1st, 2021, and then the all-time low is about 45 cents on March 13th, 2020. They have a market cap of $1 billion. They have a total supply of 1.8 billion. They have a max supply of 1.8 billion, and they have a circulating supply of 1.3 billion. So the market sentiment of Stacks, again, just like the recent coins we have been showing you guys, is bullish.
Thank you, Colton. And what about the latest news and development regarding to Stacks?
Yep. So since Bitcoin's ordinals hype, the STX prices have remained in the bullish region. The Bitcoin the Bitcoin utilization increased as Stack develops Hyperchain. At press time, the token had been increasing, since January, almost over 200%. On the Bitcoin, on Bitcoin, Dune Analytics revealed that ordinals hit a high of 9.25%. The hike equals more transactions adopted smart contracts on the Bitcoin blockchain. The STX market capitalization able to beat the 1 billion mark while maintaining the stance. So as per Bollinger Bands, STX volatility was extreme. STX price touched the upper band and also crossed it out at the price time. Indications from the awesome Oscaller, STX solidified bullish still. So this guy named Chris Bernsky, formerly lead crypto investment of ARK Invest, ordinals have catalyzed a cultural shift in Bitcoin that will work to STX benefit. For those that want more programmable use of BTC apps built on top of Stacks, will provide what they see. So STX, the only cryptocurrency that has resisted the assault that has devastated the broader crypto market on February 28th. At the time of writing, STX, the leading gainer of 40% among the 100 cryptocurrencies tracked by CoinGecko and CoinMarketCap. It is up by 191% in the last 30 days, and this was said on Monday, February 27th, and the market capitalization equals 1.1 billion. Since the order protocols went into place on January 21st and allowed users to embed references to digital art into mining Bitcoin transactions, demand for STX has absolutely skyrocketed. A recently released investment strategy by North Rock Digital highlighted Stack's emphasis on decentralized finance, its novel use of smart contracts, and with Bitcoin as distinguishing characteristics among blockchain initiatives. STX is the first token whose offering has been approved by U.S. Secretaries and Exchange Commission. Like I said, this is very big, especially here in the U.S. They're very against crypto right now. Shouldn't say they're against crypto. They just want to regulate it, and they want to, make money off it as well. But that's the whole point of crypto is you are decentralized. They're not going to make money. They're going to try their best to figure it out, but it is cool for them to see the value and accept some of these, products, and some of these projects at the end of the day. It is really cool to see. Bitcoin Layer 2 protocol stakes network native STX token grabbed the biggest winner trophy among 160 assets in CoinDesk Market Index, soaring 260% in February. STX started off the month hovering around 27 cents, and it climbed as high as 95 cents on February 27th. So again, there's this huge price surge. One of these players have said, the person's name is Arca Tally. The broader idea of improving the Bitcoin network scalability has been around since Bitcoin's top upgrade in 2021. But she added, more information has become available in the last few weeks and people buying and trading them more. A lot of people have been saying, well, if ordinals do really well, this gives the reason for people to use the Bitcoin network. So again, this coin really depends on how well Bitcoin does. But to be honest with you, as you see, even in a bear market, Bitcoin does well. So I think this coin has the potential to do very, very well.
Thank you, Colton. And how can you stake stacks? I mean, I think there are several options about, in this case, stacking and non-staking.
Yeah, so users can stack their STX in the form of staking. So again, they don't really say that you're staking, you're stacking with stacks. You need to hold a certain minimum amount of STX, lock up on the network in return for rewards, and the rewards would be in BTC, available at the end of each reward cycle, which is approximately 2 weeks. Basically, you can put stuff in a pool, for institutions and larger holders, you can do custody offerings. And then, of course, you can do it on your own, through your own wallet. And that's kind of what we recommend. Right now, it is very dangerous to put anything on a central exchange, especially, like I said, with the clawbacks. You'll kind of find out on Tuesday that, basically what the government is trying to do is that if, let's say, you take your money out, today, and in 30 days, let's just say, for instance, Binance goes out of business. Well, what the U.S. government is trying to do is saying, hey, because you took out your money less than a month ago, you got to give us 50, 40, 60% of what you took out. So you could have already spent that money. You could have already, invested it somewhere else in the stock market, etc. But they're trying to claw back and say, hey, we need that money. It's only fair, blah, blah, blah. So we'll have a video on that next week. But like I said, is it really worth it for the extra 1%, 2%, 3% at this point? Not really. Just keep it in your wallet. Keep it secure. You don't want to lose it. My portfolio is still locked up. I don't know what's going to happen. We're a year later from Celsius going down. So, keep that in mind. That's one of the big things I wanted to pass along to you guys.
Thank you. Thank you very much, Colton. And how do you see the future price of stacks?
Yeah, we're looking at about an 18x here, Leo. I mean, that's, and to me, that's more on the conservative side because, we saw what Bitcoin did when it was not a bear market at the end, at the end of the day. So we'll see what happens. But, Tech News Leader, Digital Coin Price, and Price Prediction have some price predictions for us. Tech News Leader, in 2024, thinks it will be $1.55. In 2026, they think it will be $3.39. In 2028, they think it'll be $7.45. In 2030, they think it'll be at least $16. Digital coin price, they think it will be $1.77. In 2026, they think it will be $3.46. In 2028, they think it'll be $4.15. And in 2030, they think it'll be $8.03. So price prediction, they think it'll be $2, which is, pretty realistic. 2026, $4.45. And in 2028, $9.89. In 2030, about $20. So, the digital coin price is more on the conservative side. Tech News Leader and Price Prediction are pretty similar. But I really do think this coin depends on Bitcoin. And to be honest with you, I think Bitcoin's always going to be number one in the market. So it's going to do well. Now, in terms of, how many people build decentralized apps on Bitcoin, that's still up in the air. You got Web3, I can see people, taking it and doing it that way. But this coin does have very good potential, and I think it could easily 18x by 2030. But from my side, Leo, that's all I have for today. If you have any other questions, please let me know.
Thank you very much, Colton, for your explanation, presentation, and thank you to everybody, and see you on our next video on Kryptonite channel. Thank you. Bye.
Thank you, Leo. Thank you, everybody. Have a great day.
I hope this video helps. Thank you for watching. Have a good day.
If you haven't already, please subscribe to our channel, and if you like the video at the end, click on the thumbs up.